The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and I'm glad that you're joining us today. If you have any questions at all, feel free to give me a call. You can reach me right here at TFNN at 877-927-6648. Again, that's 877-927-6648. And again, feel free to give me a call with any questions that you got. And let's go ahead and start off with what we do every day, do our market wrap on markets all over. We got the S&P down 7. We got the Nasdaq down 19. The Dow down 42. The Russell just down a mere 3.5 points. Looking over at gold, we got gold down $19 right now on the day after falling down quite a bit. Had a 2 deviation move on gold today. And sort of ran back up and is working on pulling its way back down. We'll see where it ends up when the day is over. And looking on over, checking out copper. Copper is down over 1%. Silver, again, the big mover. It's been moving like crazy today. Silver down nearly 4% today alone. So down 1.34 right now on silver. Copper. Copper's down $7 right now. That's about a 1% move. And then, not copper, corn. Corn is down $7. That's about a 1% move right there. Soybeans up 3.75. Pretty small move on soybeans right there. We got oil down 33 cents. Natural gas down over 2% today with that oil or with that natural gas inventory report. And sort of odd, it went up based on the price, but then finally started to pull back down. We got euro dollar flat on the day, pound dollar down 37, Aussie dollar down 37 as well. And we got the U.S. yen up 21, U.S. franc down 25, U.S. Canadian down 1. So basically the dollar gaining pretty much on across the board there. And with being flat on the euro dollar. And looks like we have a caller right here. We got Paul asking about settlement prices. What's going on, Paul?
Hey, Darrell. How are you doing today?
Hey, doing great. How you doing?
Could be better question. What's the best place to get the settlement prices in real time? If, for example, have particular trades on, I know on your platform you can't list the actual prices themselves. And in terms of the charting itself, is it true that it's not the actual price of the going price, but it's the difference between the bid and the ask on the charting?
Well, it depends on what chart you're looking at and what platform you're talking about. Are you talking about the Nadex platform?
Talking about your platform on Nadex, for example.
Well, I don't know Nadex, but I have a radio show about Nadex. But yeah, okay, so the Nadex platform, the charts on that?
Correct, yes. It's not indicative of the prices itself. It's only the difference between the bid and the ask as an average.
Oh, okay, so if you were using well, they do have the underlying indicative chart, okay, at the bottom for Forex. At the bottom there, you can see on my screen. And you can go down to the very bottom on the Forex, and you can open that up. You can also use the master spreads.
I'm not asking about Forex. I'm asking about the futures, for example, the Russell.
Okay. So on the Russell, if you want to look at it, you'd go over to the indices, you go to the bull spreads, then you'd go over to the Russell. And then if you want to see the closest one, you're going to look for the wide spread. You're going to look for the master spread. Okay?
Right.
Let's see here. We'll go over here on the Russell. That's going to be the 50-point wide spread. You click on the chart, open it up. And then on the chart, now this is not the underlying, like you said. It's a derivative of the underlying. Reopen it there, and then you can choose whether it shows the bid or the ask or the mark right here. So under Edit Settings, so you can choose bid or ask or mark, right there. So and that's the price of the spread itself. So now whether you're looking at a spread chart or whether you're even looking at the actual Russell chart, the Russell 2000 chart. That's not necessarily going to be the settlement price, so that you see on there. So to actually see the settlement price is going to be a weighted average depending upon how what settlement you're looking at. So if you're looking at a settlement on Nadex, like how they settle at their expiration, is that what you're asking for?
No, I'm familiar. I've watched some of your other videos on how you do that. You take the 25 minus, the 5 of the highest and 5 of the lowest, and you average it out. I'm familiar with that. It's just what is in real time, if I'm doing the futures like on the Russell or the S&P, what is the actual best way to get the real-time actual quotes? I mean, I understand that the charts really don't show the actual real-time price itself. It's a difference, or it's an average of the bid and the ask. I mean, is there another website, like if I go to Reuters, if I go to Bloomberg, I mean, do I have to pay for that price, the identical price that you use? Where do I get the identical price?
Okay, great. All right, so now I understand your question. All right, now understand. Let me go ahead and go over one more thing on here. You don't have to look at the mark or the mid, which is what you're talking about. You can look at the bid or ask over on Nadex as well. Okay, so you can choose bid or you can choose ask. All right, so right there under options and settings, if you open a chart, then you actually can change what's quoting.
I don't know if you could expand that. It's kind of hard to see. I mean, I have a.
Let me try to see if it'll let me expand this window or not. Let's see here. I know it'll let me expand the main window. Let's see if it lets me expand the chart window.
And grab it by the corner and drag it all across.
I don't know if it's still going to expand this part though for you. But anyway, as soon as you open a chart, you'll see options in the top left corner. Okay?
Right.
And then click on Edit Settings, and you can choose mid, bid, or ask. So if you want to choose the bid, which is what most platforms are showing, you can choose bid. Now, for real-time charts, I'm glad you're asking, because one of the things I do tell people to do is like, hey, the master chart's a good way to get started. But for real-time charts, I use a platform called Ninja Trader. It's free, so you can download it, right? And so you can go on there and look at that, and basically just click download, free, use it now, and so you can say, hey, referred by Darrell, whatever. Okay, and then also I have a broker that I use that actually will give you free live data for futures. Can't really promote them on the air, but if you want to send me an email, dmartin@tfnn.com.
Okay.
And I'd be happy to. I use Ninja's platform all the time, so I can put it up right here. But if you'll send it to me, and you can get hooked up today with live data, free Ninja Trader, and be ready to go. So
now, are these identical? Are these identical to what Nadex uses in terms of? I mean, the quotes that I get from Ninja or the other quotes you get with, like for example, I noticed on Thinkorswim, they're a little bit different.
Well, Nadex is a derivative. You're not looking at the indicative. So now the exchange itself, the CME or the ICE for say Russell, okay? I mean, that's going to be the same across different platforms. That's going to be the same on Ninja as it is on TOS, as it is on TradeStation. That'll be the same across the board. So, but what you're looking like right here, this master spread is the price of the spread, which is going to be very, very close to Ninja. Like I got gold up here right now. Let me switch it over. I'll load Russell. So let's see here. We got Russell. We can look at the live price on it here. Okay, so we got the Russell at 824.9. This is basically like the mark of that actual would be pretty close to where it's at right now. See, it's 825. 825 is basically right in between the bid and the offer on the spread, on the bid-ask spread. So the master spread would be very close to the underlying chart, but you definitely want to be using the underlying chart when you're doing trading on Nadex. And I like Ninja best for futures. And, the broker I use, great commissions, low margins, free data, and you don't have a trading requirement to get the data. So it's pretty cool. But I highly, highly suggest it. And but yeah, just go ahead and email me. I'll get you all the information for that.
Okay, thank you. One more question. Hello?
Yep, right here.
If you anticipate, like today, the market would spike up, what would be the most productive trade to enter on a spike up and the market trending down for the rest of the day? What position would you take in those cases?
If you're looking at a spread, then I would go over and which market? Say the Russell or?
Well, whatever is the most. It seems like the Russell there's not a liquidity there. A lot of the S&P seems to be more liquid.
Yeah, there's enough, but I've never had a problem getting filled. But you could do either one. If I was doing the S&P, I'd go in, I'd hop in the box spread scanner, I'd throw in and say, hey, I want to do $100 max risk, 2-to-1 risk-reward ratio. I want to buy. Reward-risk ratio, I mean. And then I go over and if I'm going, for the end of the day, then let's see here. So in the S&P, the best spread right now, I mean, you're looking at about a $95 risk. But it's like right there at the market. So there's only like a 0.1 difference between where it's quoting and where the market is. So it'll be at its break-even distance on barely any move. You can go for lower risk, but you have to have a larger movement. Here's one it's about the same. So this is actually a little bit wider. You actually can make more money on that one. So like this one has they both had $95 in risk on the two spreads, but this one has $199 profit potential. There we go. And this one has a $299 profit potential. So they have the same risk, same time to expiration. So out of all the trades available, this would definitely be the best trade to buy if you were going to buy the S&P, if you thought it was going to rally at the end of the day, would be the 1410 to 1450 spread. So is that what you're asking? Like what would be the best spread to use?
Well, actually, in the morning, for example, at 8:30. I mean, if you anticipate the market spiking up and then trending down, how would I put a trade in to anticipate a spike up, not at the market, but on a spike up? But obviously, it don't have to be at the top, but anticipating a trend down as it does today, or it seems to do quite often recently.
Yeah. So we got. I mean, even on the Russell, you got the spike up right here in the morning, then it bounced and fell on back down from there. Let's look at the S&P because that's the one you were asking about. So let me open that one up. So on the S&P, let's see here, you get this spike. Now that spike was pretty wild. Basically, what happened was the unemployment news shot everything off earlier in the morning, and then we go over here to 9:30. It leveled off after that. It went back up to grab those limit orders that weren't filled on just stocks from that news, and then the rest of the news was bad that came out, so it went ahead and pulled down. So, I mean, you could put an order in to, buy a spread. Just make sure you have a take profit target, like either a deviation level or maybe a recent high. Like right here, I mean, we hit this high of, 1431.5, and then after the market opened, we hit the exact same high of 1431.5. So, that was going to be a resistance level, obviously, and it was. It hit the level, stopped, and then reversed for the rest of the day. So when you see a spike up on good news, pulled back because of the bad news, and then went back up on the basically the market filling the orders there from the good unemployment report that came out. And then as soon as that, took care of itself, and it fell back down. So you could buy a spread like right on the open. After this had all happened, you'd sell out when it hit 1431.5, when the market hit, not necessarily the spread, when the market hit 1431.5. And then you could also look to sell another spread when it hit that area to, take advantage of the reversal on back down.
Now, does your box spread, how do you know which one to buy, which one to sell? Does your analyzer point that out, or are you just doing this from experience?
Well, I'll answer that question right after this commercial break. Can you stay right there?
Yes.
All right, great.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Happy holidays from TFNN. Our most rewarding Tiger Dollar sale is back this December at TFNN. Normally, we offer only a 10 to 20% bonus on Tiger Dollar purchases, but through December 19th only, when you purchase Tiger Dollars to spend on any of our products, you get a 25% bonus on your purchase, and up to 10% of whatever you spend will be donated to the Salvation Army in your name. You'll receive a personalized thank you letter directly from our local Clearwater Salvation Army administrator in appreciation of your donation. Tiger Dollars can be used on any of our newsletters or subscriptions, never expire, and are fully transferable. Take advantage of our most rewarding Tiger Dollar sale of the year right now. Visit TFNN.com for all the details and to make your purchase today. Happy holidays from TFNN.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just checking some things out and answering some questions for Paul here. All right, so Paul, so you're asking about the scanner and how to pick the right spread?
Yes.
Now, what the scanner is for is once you've chosen the direction, okay? So based on, like, I mean, I have my trading style, you know, Larry has his, and Tommy has his. We all have our different trading styles. I use a simple pattern combined with deviation levels. And so basically I get on, basically once there's a lower low and then a higher low, then I get in on the break of that previous low. So I call this the apex, and A for alert, P for pivot, E for entry, and I take profit. And then I look to tighten my stops every time I hit a deviation level on the way down. So that was a short trade right there on the S&P. So I wouldn't have got short this morning until about 1424.75. Once I went short on that trade, then I got to figure out what spread am I going to sell. And that's where we're going to hop over to the scanner. And at that time, I'll click on sell. And then I'll be able to see what spreads are available within my, you know, because you can leave this at 102 and it'll stay there. And then I can click buy, sell, or choose whatever market, and it'll keep those parameters for all the markets. And then on that, I just basically look at it and I go, okay, well, how much time do I have to expiration? How far does that have to move to be break even? Like this trade right here only has to move 6 ticks down to be break even. And it's a $54 risk with a $242 maximum profit potential. I don't necessarily expect it to make that maximum profit potential. So my target on this right now would be down to about 14.15. And so if I'm selling at 14.19.5, then you're talking 4.7. So I'm expecting to make about $47 on that trade if I get in it. So I may not even enter that trade because my risk reward is about equal on the trade. See this one right here, I could sell it at 14.20. Still looking at about $50 risk reward. So this is, but of course we're getting in late in the game now. So like right now I wouldn't be going short just because I don't see a good risk reward setup. But earlier in the day you would have been able to hop in on the trade. And let's see here. So 14.24. Let me find one. So 14.25 would have been the trade you would have chose. So let me show you this. We'll actually pull it up on the Nadex platform over here. All right.
Let me ask, why did you choose 14.24? How did you arrive at that number, that deviation?
The deviations. The 14.24. I was just quoting the 14.25 was the ceiling of the spread, and the sell price was 14.19. Now my take profit was at 14.15. So how did I arrive at the deviation of the 14.15?
No, the 14.24. I mean, how would you? What is your trigger point? What is your decision to go short?
Oh, okay. So how do I go short? All right. So basically, I use one pattern for all my trades. Okay, like every directional trade I do. If I'm doing any kind of trend trading, swing trading, where I'm timing the entry and the exit of the trades, and so what I did was I waited until it broke the previous bar's low. So I'm in a downtrend, and now what I'm waiting for is a break of a previous bar's low right there. So let me pull up a chart. I'll show you this. It's like right here. So the market pulls up. It's trending down. And then now what I'm doing is, okay, now once I get the higher low, see I have a low right here and then I have a higher low. Okay?
Yes.
Then I'd get in below that. Well, that doesn't get filled. So then I get another higher low on this bar. And so I'm going to get in below that. And then that did get triggered. So at that point, that's where I'm going short. And then, further on down, I got another one right over here, and then, potentially another one if it breaks below, like this low would be another potential entry. I wouldn't get in at this point. But just because of how late it is in the day and how close we are to a one deviation move, there's not a good risk reward trade. But I'm looking to get in. I always want the market to be the momentum going in my direction. So the trend's going in my direction. The market does a pullback, okay, sort of a buy on the dip, sell in the rally type thing. So the market's trending down, it has a little bit of a rally, and then I sell when it breaks below the previous bar because the market has to be going in my direction if I'm going to take the trade.
Okay, what type of bars? What size bars are you using? Is that 15-minute bars or 5-minute bars?
There's 5-minute bars on here. I use 5 or 10-minute bars if I'm using time-based bars. I also have another kind of bar that I use. We may figure out how to get this out there. I like to use Renko bars. So those are my favorite bar types because they're really incredibly clean. So they clean up the charts a lot, like right there. So it's just very smooth. But those are a little more complicated bars. But like 5 and 10-minute bars. 10-minute bars I like because they're very, very clean. So you'll get very clean patterns. You'll see the pullback. I mean, you don't see a whole lot of markets moving back up. Even if you took this trade over here, you wouldn't get stopped out because it literally hit the same high right there. And you're just waiting for it to come down. And then my first take profits when it breaks that A, but I also could be doing a take profit at the deviation level and tighten my stop at basically at the recent high, the pivot level. So if you want to stay, I'll keep talking about it and go into more detail for you. All right.
Yes.
Stay on. Be right back after this break.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And I got Paul on the line. We're talking about just looking at different ways to time your entries on the market, and I'm going into a simple pattern that I use, and also talking about the deviation levels. All right, so Paul, we left off talking about the entry.
Let me ask the Renko bars. What platform are you using? Is that available on Nadex?
I use them on NinjaTrader.
Okay. Yeah. I couldn't find them anywhere else.
Yeah, there's different ones out there. I have a unique one I use. Again, if you email me on that, I can get you the link to that as well. But the theory behind. But the theory behind that, is that like price movement and instead of using time? Exactly, because basically instead of worrying about time, it's like if it moves up 7 ticks, it'll make a new bar. Where that 7 ticks takes 4 hours, where that 7 ticks takes 4 seconds, it'll make a new bar. So that way, if you have a market that's just flat and choppy and not doing anything, you don't have new bars like giving you confusing signals. And so that's why it makes it so clean. Okay, but I think TD has something similar to that, but they call it by a different name. There is one called a Heikin-Ashi, which is totally different. So then there's range, which is also different. So there's different kinds. So right, they also have something. They just call it a different name. It's on TD Ameritrade, but it moves by price and doesn't consider time. Yeah, that's that range bars. They have Heikin-Ashi, which is the same thing. They have, well, actually, Heikin-Ashi is a redraw. Let's see here. I'll pull it up. And of course, they can answer questions probably a little better than I can, but I do have it's pretty good on their platform. I've been using it for a long time. I love it for options. But you can do a lot of plugins over on NinjaTrader, so that's why I like it so much. But right here, chart type, yeah, they have Heikin-Ashi. They got their monkey bars, and, so they have a couple chart types on there. But yeah, I use a unique type of Renko bar. It times the bar. It tells me how long the bar is taking, how fast it's going, all that stuff. There's a lot of cool things out there. You just got to figure out what's going to work best for your plan. That works best for mine. It helps me, just have clean charts and get rid of noise. But whether you're using 10-minute bars or Renko bars or whatever, the big thing is I want to have the market moving in my direction when I take an entry. So when I'm in a clear downtrend, then I'm going to go in and wait for the market to do a pullback. So we're going over here. I've got a downtrend set. Once the downtrend's in place, then what I'm looking for is again a pullback, and then I can get in. So like right here was the entry. So there's an entry right there, and on 10-minute bars it would have been a little bit lower. It would have been 1423.5. On 5-minute bars it would have been a little bit higher. So just depending upon what I don't like to worry about time either, because really if you think about a 5-minute bar, 10-minute bar, 20-minute bar, what does that mean? Because price and volume is what means everything. So that's why I like the Renkos. But 10-minute bars are probably one of the cleanest bars to use when you're trading.
Okay. Darrell, are there any other indicators like momentum or the any other statistics, stochastics, or moving averages that you use upon entry and exits?
I don't use indicators to give me entries or exits. I use them to tell me when not to trade. So, like if the moving average, I use I have a volatile trend line that I use. So if that's pointing up, then I would take it. I mean, let's take an example on just a moving average over here. I got a 50-day moving average on this. So obviously, I would not want to take a long trade, when the moving average is, angling up. Or I'm sorry, short trade when the angle moving up. I wouldn't want to take a long trade when it's moving down. So even though this thing's oscillating, I wouldn't go in and buy until I saw this thing turn around and start moving back up. So the indicator I don't ever use the indicator to tell me when to get in. I tell the indicator to tell me when not to get in. So that's the way I use indicators, because indicators are lagging. And so I don't really like them for entries. I don't really even like them for exits. But I do like them for filtering, for saying, hey, don't do this. So, if I have like an apex entry, if I was showing you right there, where it pulls back, if my volatile trend line is pointing up, I'm not going to take, or moving average, whatever you're using. I don't want to fight the trend, and so I use indicators to help me define trend, whether it be short-term trend like on minute bars, or longer-term trend on daily or weekly bars. But I use the indicator to tell me when not to take trades versus when to take trades, and that, it's just trading style, how I like to look at the market, and I found it's a lot more accurate way for me to do it, because I only use one pattern. I'm always going to enter on that pattern unless I'm at a deviation level, or unless I like a one deviation, like we were down here, the risk reward isn't there, or unless an indicator tells me when not to do something. So you got to combine 5 different things when you're trading. The first thing is you got to look at structure. That's just understanding your charts, your instruments, how they work. The second thing is you got to have a strategy. So what am I going to? Am I going to buy? Am I going to sell? Am I going to do a straddle? How am I looking to use the instrument that exists? How am I going to combine it? Then the third thing is you're going to go in after you got your structure and you got your strategy and have a system. So what's my rules for entry and exit, take profit, stop loss, things like that. So that's like this whole, alert, pivot, entry, and then take profit. So that's my system. But your style is when to not execute your system. So that's, when you see certain things in volume bars, Tommy talks a lot about volume bars. And then, or maybe you have something like, you listen to Stephen, he talks about, certain candlestick patterns. So that can tell you when not to take a trade. And then, so it's huge, because you can have a playbook full of 20 different types of trades you can do, but you need to know when to and when not to do those trades. And so that's the style of trading. That takes more time. And then the last piece is self. So that's your psychology of trading, your risk management, your profit management, things like that. And you got to put all 5 pieces together. And most people, a lot of times, they get into it, the first thing, of course, you're going to learn is the basics. Then they're going to go straight for a system, but you always got to make sure you filter that system with style by looking at the market. And so that's why I use indicators like trend lines to tell me, hey, don't go long, trend is short, you know. And it's amazing how many retail traders just fight the trend. And so it's sort of an easy way to keep yourself in check. It's like, do not buy, it is falling. Do not buy, it is falling. You know, I mean, you still want to sometimes because I think it's going to bounce here, I think it's going to bounce here. And, you know, for instance, I did a trade earlier today where I went short on gold. I mean, there's part of me that wanted to go in and buy just because, I mean, how far it had fallen down. And, but, you know, my trend lines said, hey, it's going down. My system said, hey, you know, sell. And when I put all the pieces together, I mean, it ended up being a good trade, and, you know, gold did drop. So even though it made me a little nervous at first because it was like oscillating around and everything else. But, you know, all in all, we had a short trade and took it and just, you know, yeah, basically, quick summary is I don't use indicators to tell me when to get in or get out. Just tell me when not to get in. So.
Okay, what are the three biggest decision points if you want to go long on gold or go long the S&Ps? What is your biggest flags to tell you to go long?
I'm going to look at just the trend. You know, is it pointing down? Is it pointing up? You know, like right here, like here's a volatile trend line pointing down. You know, so what direction is the trend? I'm going to look for an apex entry. I'm going to make sure that's consistent. I'm going to look at volume. So I'd say volume, price, and trend, if you want to summarize the three biggest flags. But by price, I mean that apex pattern, you know, and then trend by direct, you know, confirmation of that. And then volume, you just want to see, like one of the things, just to be, again, volume is very helpful to me when not to do something. But when it's spiking up, like I'm not adding on to positions because, you know, they're unloading positions. But I mean, I use the apex pattern, I use the volatile trend line, and I use the deviation levels. Those are my three biggest tools I use.
Okay, Darrell, thank you very much for your help.
Hey, you bet. And feel free to email me any more questions. I'll be glad to help you out even more. Okay?
Thanks. Will do. You
bet. All right. Well, appreciate Paul for calling in. And anytime y'all have any questions, just let me know. And there's so many different ways to trade. And, you know, that's why I sort of come up with that sort of S5 formula. I hope that helps you out a little bit out there. Is, you know, sort of learn to categorize things into different pieces. And it's like, okay, this is just about the platform, the bar types, you know, the indicators, how to put them on the chart. It's how to use them. You know, not how to use them to make money, just how to use them, period. And then how do I combine them? You know, that's where your strategy comes into place. And then, okay, how do I actually have my rules for entry and exit? That's your system. And then the big trick, okay, is when do I use and not use, basically, when do I execute my entries? And when do I not execute my entries? And that's your style. And so if you can learn to separate those, and so many, I know we want just system and style to be the same as traders because it would be so much easier to make it 100% mechanical. But you really do have to separate out the two because the system keeps you in check. It's objective. Like, I cannot enter until it breaks that low of that previous bar. No matter what I think anything is saying, that I have to wait. So it gives you rules. You need the system to have rules. But at the same time, rules don't work in every situation. Okay? So now I don't let myself break my rules by getting in early. I don't hold on to them longer. Okay? So I don't break my rules that way. But I can break my rules by not taking an entry. Okay? I could also break my rules by taking a profit because I see something in the market saying, hey, the market's reversing. The volatile trend line is going up. Maybe my system didn't give me an exit, but the market is trending up. Let's take some profit now. You know, hit a deviation level. So yeah, I can't be in a system because the deviation level changes every day. So I'm going to tighten my stop, you know, or hit it really fast and it dropped from like 1 to 2, like we saw it on gold. I mean, it literally hit 1 and then dropped down and hit 2 earlier today. And well, you know, if it drops from 1 to 2, let's take some profit. Let's not wait for, you know, bounces and everything else and trailing stops. Let's just take some profit. That's a whole deviation in a matter of minutes. And it's time to grab it and, you know, enjoy the quick, easy profit that just came in. So, you know, if I'm going to take a profit from a big move, because it just makes sense. Hey, it dropped that far. I had a big volume spike. You know, if I see something on the chart, you know, and over time your style and your system will become one. It's just you have to make sure that anything that is subjective remains in the style category. Anything that's objective, meaning this is the rule, remains in the system category. And so when you're looking at the market, that's going to be style. So like right over here, you see these big volume spikes. So when you see these, it's a good chance you need to take some profit because the market usually goes back. And see that volume spike right there, another volume spike. Bunch of contracts closed out, market pulls back. Another, little volume spike, breaking it with lower volume. Okay, this is huge. All right, lower volume right there from compared to this bar. So it broke the high with lower volume right after it. Get ready for a reversal. And even though my system, okay, got an up trend line, okay, would have told me to buy, just by reading the style of those volume bars, I'd be like, no, I'm not buying anymore. So I'm tightening up my stop. I would not be shocked at all to see a reversal when we break a high on lower volume. This one, hey, huge volume bar, great. This one broke that high. So this bar right here, if you look at it, it broke that high. Let me back out there. Right here, you can see that, and it broke it with higher volume. You see that right here, okay? So even though we see that, we don't see it here. This one, the high was not. The high was broken, but the volume was much lower. So that's an indication that the trend is running out. And so tighten your stops. Don't add on to positions, and look for a very high potential reversal. And that gives you confidence sometimes to stay in a trade whenever you're wondering if you should stay in the trade. And then as the market moves on, get across here, the market does end up actually reversing. Now I may not get in. Okay, so I may not be going short. I'm just taking profit. Okay, so is it now when it comes down, I'm starting to get into this, and I may wait till this point before I go short. Okay, right over here, I decide to finally go short, and that's right around almost 11 o'clock. Okay, or 1 o'clock Eastern time. I could go short there. So we got a trend line going down. I could go short here. So everything's turned around. So I have short trades I can start to take, but I got to wait for that move down. I wait for a pull back, and keep watching it. And as I get that, I combine the simple alert, pivot, entry, exit strategy. And it's very, very simple. It allows you for very defined entries, very defined take profits, and it's a very simple way to trade. But it takes a little bit of getting used to it. Once you get used to it, it's like, I can look on any chart and I can tell you exactly where I'd buy, where I'd sell, without even, having to think twice about it. It's that, objective. So the only trick is now I have to look at things like volume and trend line to go, okay, would I have actually taken that trade in real time? And so that's, but as far as like the objective rules, without even thinking twice, I can tell you exactly where the entrance and, take profits are. Anyway, so a little bit different, a little bit education just on timing the trade there. And so we do go into that. I'd be glad to hear any questions you have. Feel free to email them to me, and let me know more about what you think as a trader. And but the big thing is always have that system and always filter it with style. And then the last piece of, like I talked about, self. That's your psychology. One of the times not to trade is, man, if you had a bad day, if your girlfriend broke up with you, fight with your boss at work, whatever. If there's something's going on, it's not necessarily the best time to trade, okay? Because sometimes your emotions will cloud at your judgment. If you're trading out of fear, if you're trading with the rent money, not a good idea. Risk management. You got to have, how much can you afford to lose today and still trade tomorrow? How much can you afford to lose every day this week and still trade next week? That's your risk management. And the other piece is you want to go in and you want to look at gut. Just what does your gut tell you? And don't let your rules be based on gut, but sometimes your gut says, hey, don't do this. And, it's not always a bad thing to follow the gut and not do a trade. But just don't let your gut be ruled by profit and loss, or to be ruled by what the market says, what the market's doing. All right, stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. Let's go ahead and do a wrap-up on the fundamentals for the days all here. And let's see here. Looking at what we had come out today. We had the LIBOR rate out of Switzerland come out. They left it flat. But even with that, there was a little bit of movement that went on over in the dollar franc. So we can check that out and pull that up. I'll keep on moving along this. We can wrap up the fundamental reports. But let me back out here. So had a pretty nice overnight move. That report came out at 3:30 a.m. Eastern time. So you can see right about here. And U.S. franc moved up and then moved on down. And dollar got a little weakness against the franc there, but left it flat. And then moving on over, we got the core trades, core retail sales at 0%, so came in at expectations here in the U.S. And then we had the PPI number came in at negative 0.8, an expectation of negative 0.5. And then we had the retail sales came in at 0.3, expectation of 0.5. So both the PPI and the retail sales both came in worse than expected. Core retail sales came in, and core retail sales basically is the one that's without the automobiles included, okay? Came in basically right at expectations, but no improvement either. And then unemployment claims came in a little better than expected at 343,000 on an expectation of 368,000. So fewer people filing unemployment claims for the first time, and but didn't really give the market a big reason to rally. And then we have the basic Fed announcement that comes out at like 8:30, and you can go in, and what they do is they make a joint release. It's an interesting thing to check out. But all the central banks go in and they talk about the extension of existing U.S. liquidity swap arrangements. And so you can check that out, and that one comes out. Let's see here. Let me put it over on your Tiger TV there. I'll put the link up there. But it's federalreserve.gov, and it's monetary policy. And you can go in there, and let's see here. There we go. But that's one thing you can check out. Basically, they go in and they talk about the liquidity of dollar swaps. And so you get England, Japan, Switzerland, Europe, and, of course, the United States and Canada. And they all basically make an announcement. And so you can check that out and read all the details taken from each bank right there. So that report came out at 8:30 as well. So a lot of information coming out at 8:30 this morning. We had a business inventory report that met expectations at 10 o'clock. We had the natural gas report that came in, and it came in better than expected, but natural gas rose. Now, usually if the inventory goes up, natural gas declines. But when it first started off, natural gas, I mean, it flew up. And before, it looked like I think it pulled down before the day was over. Yeah, so right here you can see where we had this report. It flew up, and then it finally gave it up and went on back down. But I was shocked when this first happened, and we saw it literally just like fly up and then fly back. But that's what it should have done to begin with. So you got to watch out for that manipulation. That's one of the great things about Nadex. Can't get stopped out on a trade. And then looking on over, we got a couple of reports coming out of Japan. Are not a big impact report. We do have the PMI coming out of China. So that's coming out at 8:45 tonight. Check that out over on marketeconomics.com. MARKIT economics.com. They have all the PMI reports for all the countries. And again, that'll come out at 8:45 tonight. And so we'll see. The problem with that number is there's not a big, there's not an expectation on the number. So just an actual. And so did it get better or did it get worse? And so we'll see if it got better or worse and if they revised it. And I'm looking at, what do we got going on tomorrow, early morning tomorrow, being Friday. We have the French Flash Manufacturing PMI coming out at 3 o'clock. Not as big of a deal. Also available there at Market Economics. Then at 3:30 a.m., the German one will be coming out. That one is bigger because obviously Germany is a much larger part of the economy. That comes out at 3:30 a.m. So if you're a dollar trader, definitely keep an eye on that. And then we'll roll on into the core CPI number coming in at 8:30 a.m. Eastern Time. That'll be your big mover and shaker as far as the day goes tomorrow if it's off expectations. Core CPI, 8:30 a.m. for the U.S. dollar. All right, well, everybody have a great day, a safe trading day, and I will see you tomorrow.